just below the market maker's upside expected move for the day. Um, Slightly bullish reaction to the positive JOLTS data, which came in a bit better than expected. Although the manufacturing data was kind of meh. We still, I think we're still short of the March high. Maybe not. Out here on ES, we broke above 59.75. We held that into close, regaining the longer term trend, and possibly pushing up for another test at 6,000. Uh, Depending, obviously, almost every day this week is going to depend pretty heavily on data. But I think bulls are well positioned for like a ES 6,000 test. Unless this sells off in the overnight again, I think that's in order. A little bit of a return on the dollar, but yields climbing up a bit today. Not quite closing over yesterday's high, but fairly close to it. Um, Commodities not performing as well as yesterday, but oil still continuing up, now above $63 a barrel. Correlation looks like it's kind of bottoming out, and so leverage up and the dispersion kind of fading. We might start to see correlation move higher. Um, since it doesn't seem to be gaining any significant ground to the downside. Like today's upside move relative to the drop in correlation is kind of insane. So a lot of this might just be like near dated leverage. Yeah, I would probably keep an eye on correlation if it starts to break down. Carry trade levered up, 849 to 855. Forward yield on vol still pretty negative, around negative 7.95%. And yields still pretty flat, as they've been through most of this period. A little bit of an uptick in bond volatility yesterday, but correlation on the 3-month continues to fall. I don't think we're going to see a lot of bond volatility anytime soon, at least not until we get closer to the debt ceiling vote. But I think they're talking about that for like beginning of July right now. We are starting to see a little less out of the money put interest, and skew is beginning to climb up, moving up today above what was the recent high, or moving up yesterday above what was the recent high, and probably continuing upward as we see more short vol come in. Still seeing a drop off, actually a slight uptick in correlation with today's upside move, which is interesting. That could indicate that some of the short vol is pulling back on the upside here, which might weaken like supportive structure. I don't know if that's really enough of a move to say for certain, but it is interesting that correlation turned around a little bit today despite the upside. Breadth still 52% of the S&P above its 20-day moving average. Fed fund futures picked up a little bit with a slightly higher chance of a cut, but just 1 point. And the bear steepener fell back below 0.5. Looks like not the best gains in tech today. Despite it overperforming earlier, it ended up actually failing a bit there at close. The S&P 500, moderate gains in like finance, and broader tech was kind of just flat services. Electronic technology did very well today. Retail trade pretty flat. No movement in any sectors where you would think that people are risking off. Although the big move up in producer manufacturing is kind of interesting. Even if they do benefit from a slightly better labor pool, that's kind of strange. I don't know if there's too much to read into that though. Out here we got a new high. I think maybe we're just short of the the March high from this year, which was 59.86. So still haven't broken that to the upside. Hold on one second. Let me extend this a little bit. But we did break it back above this lower trend here. And I think, well, not quite back into that consolidation. That's probably dead now. We could probably get rid of that. But the next upside test of some importance is going to be around 6,000, and that's just above that March high. And beyond that, 60.31 to the upside is also a pretty important level. As far as failures go, I mean, we'd still want to see 58.37 fail, and we're pretty far from that right now. This bounce got a little bit more legs on it than I would have anticipated given the weakness, but yeah, without a failure of 58.37, I wouldn't say anything's particularly bearish. And pullbacks are likely to get bought pretty aggressively, or at least puts are likely to get sold. So I would look out to the 6,000 test and the 60.31 test, and then I wouldn't really be concerned about downside or downside continuation unless 58.37 was lost. Anyway, I think that's about it for today. JPY USD looking toppy. Maybe. I mean, the Japanese bond auctions are not going well recently. I don't have any options on AQN, just shares. Yeah, it's not worth playing options on. The option chain is dog shit. It's like a dividend utility stock. It's not good for options. Thanks. Yep. Thank you guys so much. I'll catch you later. Peace.